Good evening, everyone. Time for another silver update. This is the silver 1 hour silver chart provided by netdania.com. You can click on the link below. And I've drawn in a number of trend lines as well as a number of support lines, and I'm going to go over those in just a second. But before I do that, I want to go to the question of the day. This is actually a question that was sent to me, and I went ahead and posted it on the forum. This was emailed to me. Dear Brother John, and this is a question that I get a lot. Dear Brother John, thank you for all the work you do. The silver market is very confusing, and there are few commentators who can be trusted to tell the truth. I understand that you are a believer in Jesus, and therefore I lean more heavily on your opinions. But I have a major concern that bothers me very deeply, and that is how can charts and graphs have any meaning when the price of silver is being manipulated at will by the evil powers presently in control. What this means to me is that all the numbers are really meaningless. Therefore, how can one draw any valid information from these silver charts and graphs? I would really appreciate it if you would address this issue. Thank you, Don Martin, Pastor. So, the good pastor has asked a question that actually a very large number of people have asked me. So I'm going to try to give a little analogy possibly that will help explain this. Let's use an example of a basketball game, for instance. And it would be just your typical college basketball game, 2 halves or whatever. And then we don't need to have any side betting on the game, although that's obviously the case in modern society and often what ends up being the incentive for the cheating that goes on. But let's say that we do have some cheating going on in this basketball game. So perhaps a large number of bets have been made as to the outcome of this. Say it was a Final Four game in the NCAA tournament or something, and particular players on a particular team had been paid off to throw the game and to miss some key shots or whatever. I don't really know the details. I'm just guessing, but let's say that they throw the game. So that's probably the easiest way to rig a game like that. I'm not way into the ins and outs of sports rigging or sports scandals, but there have been many in the past, baseball, boxing, even basketball. So in this case, let's say that we have some of the athletes on the team that ends up losing, and they had thrown the game essentially by not scoring in a situation where they could have scored, basically throwing the game, or like a fighter taking a dive or something like that. Now, the appropriate criticism would be, someone would say, if I were attending that game, say, well, John, I thought you had mentioned to me a rumor that you thought that perhaps this team was going to throw the game. Why are you looking at the scoreboard? Well, the answer obviously is going to be, well, I'm looking at the scoreboard to see if they are throwing the game. Because if they're throwing the game, the score is going to indicate that fact. That's very similar with the silver market. The reason why I'm looking at the prices is because the prices tell me how they're rigging the game. So it's not like the prices and the charts are meaningless. The prices and the charts are actually showing you what's happening. The rigging of the game has to do with who's doing it and how they're doing it. But the ultimate result is in the price and the volume. So just as it is still important to observe the ultimate outcome of the score of a rigged basketball game to find out whether the rigging was successful, it's also important to view the price and the price points to see what the impact of the rigging of the market is. And of course, then again, the other point that I'm always making is that as long as the coin suppliers such as APMEX Gainesville, and the one I'm going to cover tonight, Tulving. As long as these suppliers are connecting their prices to this rigged game, then what this rigged game does matters. So hopefully that is an explanation of why, even though I believe that the prices are being manipulated, that doesn't mean that I don't believe that the price action is invalid. So on that issue, let's take a look at some of the price points that we've seen here. The longest term trend line we have in this 1 hour chart shows us a price of about 32.40 or so. That's going to be needed to be penetrated to actually turn around this downtrend from a longer term perspective. The strongest trend line we have running here, you can see, starts here and we have one, almost a one, so, and then we'll call this a 2, 3, 4 touch points here, and that one's going to meet at about $30.50, right where this other line of the bottom of that substantial drop was, rally failure. So $30.50, that's going to be another key level that we need to get through to show that this is beginning to turn around. The $30 level, of course, that's a very key level that a large number of people have been watching. A lot of people had claimed it wasn't going to go below that. We touched it and bounced hard, bounced around a couple times, and then we took it out. So we're down now. We touched my other support point that I had on my long-term chart. I had 28.50, 28, and 26, and 22. Those were the big numbers that I was showing, and we have to wait and see whether this bounce that we have now, not a real strong bounce at this point, but if this thing ends up getting legs, whether it's going to go through 29.50 first, then 30, 30.50, 31, and 32.50. Those are going to be the prices we're watching. Otherwise, on the downside, we're watching 28.50, then all the way down to 26, and then all the way down to 22. So let's go over to the story of the night I wanted to cover, and that is the new one from Jim Willie. Very, very long article. I'm just going to read a part of it. The main thing that I want to concentrate on is what Willie is referring to, the transfer or the takeout one by one of the Western banks by the Eastern powers, and this is connected to the gold price, and it's being done at a low gold price, and Willie is indicating that that's signaling the taking out of the Western banks. So let's read this real quick here. Gold readies for the storm. My firm belief is that a fair, equitable gold price will come only after the price goes dark in the normal traditional paper-denominated channels. For over a month, the gold market has been operating like within the eye of a hurricane. At work is a new promising dynamic that most in the gold community seem totally unaware of without solid sourced information. Repeatedly, my gold trader source, who has numerous billionaire clients on 3 continents, informs that truly gigantic buy orders are sitting between 1600 and 1680, spaced by $10 apart, having greater volume with each lower notched price in an inverted pyramid. The Eastern Coalition is angry and motivated, fitted with well over $50 billion in a war chest, determined to wreck the New York and London bankers and remove them from their corrupt perch. Gigantic buy orders are being filled, the victims being gold cartel member banks themselves. They are highly vulnerable. They are strapped for cash, confirmed by a separate source. They face margin calls on sovereign bonds of Europe, compounded by some bad forex positions. To extract calls on sovereign bonds of Europe, to extract themselves from the pinch of the margin calls, the cartel banks are being forced to sell out their precious metals bullion held in reserve in order to obtain desperately needed cash. This is a new phenomenon not seen a year ago, in a total reversal used against them, since in the past the cartel used the same methods against client hedge funds. The gold price will rise only when the Eastern deep pockets decide they're content with the massive gold raids on cartel gold reserves. only when enormous volumes of orders are filled at low prices, thus draining cartel member banks. The gold price will not rise until the Eastern Coalition has had their fill in a Western diet rich in gold on this round of the Groundhog Day cycle. The last cycle ended in mid-January. This round lasted longer and involved much more gold taken from the cartel banks. They are badly and soon mortally wounded. Witness the unraveling of abused leverage by the cartel banks. In the process of deleveraging, the cartel is losing their gold bullion. They are vulnerable, made worse by their insolvency, aggravated by their lack of liquidity. The paper gold price is imploding, but not the physical price. The divergence between paper and physical gold markets is proceeding exactly as previewed a few months ago. It is hard to see because the great majority of gold investors do not have access to details on billion-dollar gold orders being filled, who is supplying the gold, who is demanding the gold, and the conditions relating to margin calls, complete with motivated vengeance to deliver death blows in a global power struggle. Most people cannot contact their favorite friendly gold trader with a Rolodex of 10-figure clientele and request the latest battle one against a targeted bank. History is being made, but behind big, broad curtains. Unfortunately, the Eastern gold raids waged against Western gold cartel might be satisfied with gold bullion pulled from the back door of the GLD exchange-traded fund. As the Eastern Coalition observes the deleverage process and swoops to exploit the insolvent condition compounded by lack of liquidity, the demands made on cartel member gold reserves might come from GLD fund itself. The cartel simply shorts the GLD stock, entitling themselves to vast truckloads of GLD gold bars in illicit grabs. The tracks are covered by altered bar lists, whose track record is so abysmal and faulty that new covered tracks are easily made. The GLD fund is destined for a day like Madoff and Corzine before Congress, but with far more lawsuits. Given the vast conduits between Europe and the United States, any event triggered on the continent will extend quickly to the US and the UK. The first victim was UBS, stripped of their gold last summer. A hint was given that the next victim might be Deutsche Bank. My other guess is a London player like Barclays is being stripped of its gold, or a big US bank turned timid after the MF Global attention. Major players are falling victim to the global financial crisis, better described as a global monetary war in which the US dollar and the US Treasury trading vehicles are the weapons of mass destruction. The race is on to replace them. The Chinese and their allies are the Team East in charge of overturning the current power structure dominated by gold story propaganda, mortgage bond fraud, hidden US T-bond monetization, diverse market interference, private account theft, chronic naked shorting, controlled regulator puppets, rifled allocated gold accounts, salted gold bars, expansive derivative schemes, abusive leverage, and numerous trillion-dollar roll programs conducted by the U.S. Department of Treasury and the Bank of England. The new monetary platform will have many aspects, such as a vertically structured barter system, a handful of hard asset currencies, and potentially an element of gold in trade settlement. The role of gold in trade settlement is taking shape, a movement which will turn the US dollar into a widely discarded toxic paper, a ticket to the third world. These are exciting times if one can avoid the traps and pitfalls, including hooligans bearing U.S. government badges, offering bounty, working against the enemies of the state without definition. So, sorry about that. I'm running low on battery. Fantastic. Another fantastic Jim Willie. A little behind the scenes stuff. I'm not like Jim Willie. I don't have inside sources, so I don't know what's going on with the insiders. But Jim Willie apparently does, and he's indicating that it's a system of the Eastern powers breaking the banks one by taking their gold bullion at low prices. So very interesting. I've got just a few minutes left before my battery dies. So I wanted to go to Tulving and check out some of the deals there. We always want to look for deals when we've got price dips. Now this isn't a price dip spike, but this might be the low. So 29.25 is the price we're looking at. So that's a pretty good price to stack if you think we're not going much further into the 20s. Otherwise, you might want to, if you're deciding to stack now. You might want to stack half now and stack half later, or some people like to do thirds, try to scale their way in. It's up to you. Anyway, I want to go over some of the deals here that I think are pretty good deals. And tolving usually requires quite a bit more. You can see for the 90% you need to do 1,000 face, so that's going to be, you know, a decent amount. But if you do have that amount of money, you can get some really good deals here. One that I really like here, I like the 90% silver coin bags of 50-cent half dollars. With that, you don't have to worry about your just regular 90% silver bag, which currently is 20 cents an ounce under spot. Well, you can get 50-cent pieces here, 1,000 face, and it's 10 cents under spot. So that is a fantastic deal if you're looking for really cheap silver around spot price. The other one I like here that is cheap around spot, we've got 1 ounce 999 Buffalo silver rounds from the Golden State Mint, and he told me he's got more than 10,000 of them, and he's got a 500 coin minimum. But if you do pick up a monster box of them, you can get them for 69 cents over spot. So you're talking a straight $30 right now for those if you pick up 500. The next one that I like, of course, is going to be the he's got boxes of the Wildlife series. You can see he's got the same price on the silver Canadian Cougar as he does on the Moose Wildlife. He's got them both for $2.75 over spot. That's going to put you right at 32 bucks. So I think that's a little bit higher. I think Provident has them for 31 something. So you're looking at 31.50, maybe 32 to be able to pick up the Canadian Cougar or the Canadian Moose. I think I would probably go with the Moose, but both of them are a pretty good deal. That's going to be only about 75 cents above what you're paying for your straight Maple Leafs or Eagles. And of course there's the one that I had, which was the half-ounce Lunar Dragon. That's $3.99 per coin above spot. So I'm assuming if spot's 29, you're talking 29.20. You're talking about $14.60, and then you're going to add $4 to that, so $18.60. So you're going to be able to get that half-ounce Dragon for $18.60. So some good deals over at Tolving, and you might want to check them out if you're one of those people that has a lot of money that you can plunk down at one time. So back to the chart. It looks like we have a number of points we need to get through if this is indeed the bottom. If not, we're looking to round down and penetrate 28.50 and perhaps 28 and then 26. And we'll talk to you next time.